Hi, Craig Ridley here from Your Business Coaching Club, and welcome to another one of my business vlogs. Now, I'll apologise up front today. I'm going to go on a bit of a rant, and I'm going to go on a bit of a rant about my profession, the accounting profession. I got really angry this week. I met with a new client prospect. He's a doctor. He's running a specialty clinic and a general practice. He's currently using his accountant to provide business improvement advice on a monthly retainer basis. The accountant's monthly reporting pack shows that the business is profitable, and it seems to be hitting all the KPI targets that they set a year or so ago. So it sounds like everything's going pretty nicely, doesn't it? But it isn't. The business has little cash in the bank, and it's struggling to make wage and creditor payments on time. Typically, the accountant's has neither forecast that this will happen or properly communicated to the owner why it's going to happen or why it is happening. All the client accountant discussions have centered on meeting profit KPIs, and they seem to be going okay. So where has it gone so wrong? Obviously, the business has come off the rails because no one's looking after the cash flow side of the business. You absolutely can go broke while making profits. Everyone needs to understand that. People seem to forget that the basic law of business all the time. Profit needs to be turned into cash. Cash needs to be banked. Otherwise, we don't survive. Profitability doesn't measure how quickly you're collecting and banking your income. It doesn't measure how quickly you're paying your suppliers. It doesn't measure how deferred payments like tax bills eventually build up and can swamp you. How excessive personal drawings just strip money out of the account with no business benefits. And crucially, in the case of this business, how capital costs incurred to expand the business into bigger premises, more expensive machinery, how they need to be paid for out of profits. Even if they're financed on terms over 3 or 5 years, you've got to come up with the cash every month, every year to make those payments. It's not enough to prepare a profit budget, which is what most accountants do. It's not enough to measure profitability against agreed benchmarks. You have to adopt a three-way budgeting process where the profit budget is converted to a cash flow budget and then converted to a balance sheet budget. It's not difficult to do, but even that's not enough. You must use any budget that you produce, but especially the cash flow budget, as a rolling forecast. You need to update the budget every month for your actual trading results and your balance sheet movements. You need to then look at the budget forecast for the next 3 to 6 months and update those forecasts for any new realities in the business. New finance payments, higher wages, lower sales, tax bills, expansion plans, lots of things change constantly. One of the truisms about a budget is it's absolutely incorrect. It's wrong. It'll be proven wrong the minute you finish it because your business changes all the time. So you need to keep updating your budget, use it as a rolling forecast so you've got an idea about what's coming up over the next period of time. You can forecast where your problems are going to be. That will give you a very clear view of where your cash flow is trending over the short to mid-term. And it's going to give you time to make changes to conserve, to protect, and then grow your cash flow position. I can accept that people that are new to business can make the mistake of focusing on profit before cash flow. But I just hate it when accountants fail to provide leadership to their clients on cash flow forecasting. Anyway, rant over. I've now got a new client and a challenge to change his business model to firstly stabilise his cash flow and then build a sustainable growth model. I win, the client wins. The old accountant, well, he's just left wondering what just happened to one of his best clients. My name's Craig Ridley, just another video from Your Business Coaching Club. If you're a member of the club, come into the clubhouse. Let's talk a little bit more about cash flow planning within your business and how you can control cash flow, and let me again just show you again the importance of cash flow versus profit. If you're not yet a member of Your Business Coaching Club, you should be. You should think about it. Follow the links below this video and have a look around, see if we're right for you. Thanks guys, I'll see you in the next video. Goodbye.